Hello, everyone. Thank you so much for joining us on a Saturday evening. My name is Narendran. I am part of the strategy team here at Strata. And welcome to another Strata Circle session. Today, we have something very interesting, which I think is of extreme value to you if you are going to be investing with us anytime soon. We are going to be discussing metropolitan momentum opportunities in the Mumbai and Pune real estate markets. Now, there are certain reasons why we've chosen to talk about these two specific cities, but I'll let my speaker get into the details of that. So today we will first cover what are the overall trends in the India office space market. We will also try to understand how someone analyzes an office market. This is your sneak peek into understanding how we at Strata analyze the office market. Then we will cover Mumbai, Pune, and we will also explain to you what are some of the things that we consider before we bring an asset onto the Strata platform. And to explain all of this to you, today we have Ekta Kandari. Ekta is our AVP of acquisitions. She's been with Strata for more than 3 years now. She has more than 7 years of real estate experience across India in leasing and investments, and she has over 3 million square feet of experience in transactions. She is an expert in deal structuring, asset evaluation, and market research. Ekta, thank you so much for doing this, and welcome to our Circle session.
Thank you. Thank you so much, Naren. I hope I'm audible.
Yes, yes, we can hear you perfectly. So, Ekta, without further ado, let's get into it. Let's talk about how the India office market looks at.
Absolutely right. Thank you for the introduction, Naren. The way we have structured this presentation is actually to kind of touch upon what is the current India story in terms of leasing, because of course there is tremendous traction that India has gained in the recent past in terms of office occupiers as well as investments, primarily from an institutional investments, both global as well as domestic. Right. So we'll be touching upon that. And then we will move to Mumbai and Pune, primarily because Mumbai, as we speak, has actually seen the highest investments across the country. And Pune being another city which is on its way to unlocking its potential, we thought it would be very insightful for us to pick this up as a topic today. So without further ado, we basically what we intended to show here is typically when you try to assess the performance of an office market, you see what kind of absorption was done so far in this year, and then you compare it to the previous year, right? So as we see here, we've made these assessments basis H1 performance in terms of the office sector. So about 26.4 million square feet of space was taken up across India by office occupiers, basically companies who take up office space across commercial buildings. Now, if we were to look at it as a comparison standpoint, this is very close to our last year's number of 54.8 million if we were to assume a similar absorption in the second half as well. Now, of course, because of COVID, there was a dip in terms of absorption, but as we see, there was a great recovery in terms of the office absorption, and we've also listed out some reasons why this could have been. GCCs, of course, global capability centers are really coming up in India with almost 1,600 centers presently functional with 1.6 million professionals operating out of these. The growth has been 11.4% year on year from financial year 2015. So this is obviously tremendously contributed to the growth. Apart from that, post-COVID, now companies are also realizing that return to office is an important aspect. I'll not touch upon much because it's kind of a use and abuse topic. But very briefly, I'll say that 80% of the occupiers surveyed preferred working from office, although the sentiment was more inclined towards a hybrid setup as well. So that's a little bit about the offices. There's another important thing which we've seen, which is not captured here. But if you see WeWork as a story, it went bankrupt in the US, but in India, it is really thriving as we speak. So which goes to say that, despite the trends in the global markets, India has been resilient in terms of its performance, which kind of restores the belief that it is definitely headed for uh, growth in the coming years. This is further strengthened by looking at the investment trends, especially in the office sector in India. The graph here basically represents the share of investments across each asset class. As you see, office is currently at the highest, which is 66%, followed by residential, of course, because India traditional mindset. And thereafter, you have warehousing, which is 12%. I'll also want to touch upon the lower number for warehousing. It's primarily because the organized warehousing sector is actually firming up in India as we speak, which is why there is limited inventory. So erstwhile, when industrial and warehouses would give higher yields compared to offices, now we're actually observing trends where warehousing are actually offering the least yields in comparison to the asset classes, of course, after your residential catchments and retail. So this is a little bit about the absorption trend. There's also another trend which has come up in the sense that so many developers now are looking at scaling up across the country, which basically enables these institutional investors to acquire assets, engage with one development partner and acquire multi-city assets. Basically, this is another trend which has been observed. About 66% of the transactions were actually multi-city transactions. Now, speaking of the investment quantum, when compared to last year, we still see about 2% increase in terms of the absorption. So we're at about 2.9 million square feet from an absorption, from an investment standpoint. Another interesting fact is that the share of domestic investment has actually increased. So as opposed to 18% in the last year, we've seen about 44% share coming in from the domestic capital, which basically is your mutual funds, life insurance companies, etc. Now, another interesting fact is that the office investment in this year, in the first half of this year, actually surpassed the total office investment in 2022. So this really goes to show the kind of vision that the world has right now for the office sector in India. Of course, we also saw the listing of India's first retail REIT, and we strongly believe that this is just the beginning, and REITs are definitely going to see a very different story in the years to come. Now, speaking about, having said about what's happened, speaking about what's to come, as we all know, there's great importance given to ESG compliance from a workspace standpoint. Of course, there is a push, which I've already covered, from global and domestic investors. An important point to note is that only 11% of Grade A stock right now is listed as REITs, which basically says that at least up to 57% of more potential is left in this sector. Now, of course, more institutional investors are expected to invest. Having said that, about 23,000 million US dollars of platform commitment was announced by multiple institutional investors, of which 62% have already been concluded. Having said that, even despite it having a timeline of at least few years, it's already completed in the first half of the year. Now, there's another interesting observation that the average commitment amount, the per asset, has also seen a tremendous growth in the last few years. So this is a little bit about what's been happening across India, what is the sentiment across the globe. We also wanted to touch upon how a typical office market is analyzed for any city. right? So we've just made a small demonstration with Pune as an example. But if you as an individual had to look at any city and or any building per se, it would be easier for you to assess these markets and understand how you can analyze these and accordingly make an investment decision, right? So as you can see on the map here, you have CBD, which is typically your central business district, which is basically the uh, uh, vicinity where you have maximum front offices of companies or smaller spaces. These are places which have already established as a niche. In Pune, you have Koregaon, you have that entire central belt, which forms part of your CBD, followed by SBD. Now, SBD is basically the secondary business district. This is typically in close proximity to your CBD. It is a combination of back offices and front offices, primarily driving demand in a way that occupiers who don't want to be in the CBD or want larger spaces typically come into these. Another important characteristics which is distinguishing between these markets is the availability of space. Now, CBDs generally are saturated markets, which do not have rather have limited potential for further social infrastructure development, which is why you would see the cities generally grow outwards, and then your PBD comes into place, which is nothing but your peripheral business district. These are markets which are generally for bargain hunters or rather for sizable offices, at say BPO, KPO setups, and these are basically largely also your captive campuses. So most of the buildings or occupiers you would see in these vicinities, they would be captive occupiers occupying entire buildings, having their own campuses, being part of larger campuses. And of course, the space they occupy would also be much, much larger compared to these vicinities. So that's a little bit about how you would go on to analyze any office market. Now, this would also apply to a market like Mumbai, where you have your South Bombay. There's no representation here, but just to touch upon it, you have South Bombay, which will be your CBD. Then you come on to your Low Parel, Worli. BKC is now the new CBD. So all these markets basically form your front office locations, followed by Andheri, Goregaon, Powai, Vikhroli, which then go on to form your secondary business districts, followed by periphery, which is your Navi Mumbai, Thane, etc. So this would definitely apply to all markets, most markets rather across the country. So very quickly moving on to some characteristics, while I've already touched upon it. So we've tried to basically list out the investment strategies as well as leasing strategies for these markets, right? So when we talk about CBD, you typically have small format offices. So these are there is limited institutional ownership in these markets. It is small scale investors largely who have multiple units which are leased out to companies who are operating, typically ranging from say 1,000 square feet to going all the way up to 5,000, 7,000, maybe with an upper end of say 10,000 square feet. Uh, Primarily because this is a front office which basically is to attend to customers, to retail in uh, footfall, your banks, branches, they will all be found here. Now, the challenge around CBD is primarily that the land in these areas has seen a very high appreciation already, which is why the capital appreciation component becomes very limited in this market. The upside, however, for these markets is that you will continue to receive rentals. These are mature markets. So, you will have tenants which are uh, going to continue to occupy these spaces. Even if there is a vacancy, filling up these units is going to be very, very easy. There is limited availability. There is no land available. So, typically the rentals here are the rental trend rather here is defined by the demand and supply forces. So the more demand in this vicinity will lead to higher rentals and vice versa. So as I've already covered, leasing risk is limited, capital appreciation is limited, but your rentals will continue to come. And there are no basically limited risk towards tenants not paying, of course, because these are grade A tenants or front offices. So all those risks are covered. Moving on to SBD. SBD is primarily established or developed because there is limited supply in CBD. And we'll go on to see that trend as we move towards some statistics. But when you talk about SBD as a location, now SBD, while erstwhile was more prevalent towards a back office location, but now because of the quality of grade A supply that's come in these markets, and more organized players having tapped these markets. Actually, it's something that's already there in place for several years. So I'm speaking about, say, a last 5 to 6 year trend. You'll see that a lot of front offices are also operating out of here. So these would be not your Googles and Facebooks of the world, but say probably a smaller company like Indian domestic companies, etc. And at the same time, back offices for MNCs. So you will see a lot of your uh, uh, financial institutions of sorts will be occupying space here from a back office standpoint and in sizable proportions. So typical space take up that you would see here would actually really vary. The range in comparison to CBD would be very, very wide in these markets. They would probably be ranging between, say, a 5,000 going all the way up to 1 lakh square feet. So that's a typical trend in SBD as we speak. Why an investor would look at investing in this market? It's actually the best of both worlds. So you have some bit of capital appreciation still left because if we look at the trend right now from an infrastructure development standpoint, you will see that most of the infrastructure in all cities is planned around SBDs in a way to improvise their connectivity to CBD. So if that happens, of course, a location to benefit more would be SBD rather than the CBD because it's connecting to the CBD. So leasing risk is limited because obviously now there is a lot of traction both from an occupier and investor standpoint. There's a great amount of supply which is anticipated in the coming years. And of course, as a typical uh, structure, any tenant occupying a sizable office space, for them to move base from this location is a very high logistical challenge, and of course, uh, comes with a sizable investment, especially in terms of the capital expenditures incurred. Right. So this is a little bit about the qualities of a CBD market. PBD. Now, PBD is something where you'll see that there are a lot of captive campuses. There are handful of campuses which are functioning. So that is the upside in PBD. There is obviously higher component of land available. There is more scope for more supply, but the upside is that there is also more scope for infrastructure development. So as we speak, while in SBD and CBD, there is limited scope from an infrastructure development standpoint because there is already some amount of construction. PBD actually allows the authorities to plan the infrastructure in a way that it can be optimized. Right, so you will see that locations like Navi Mumbai, locations like Hinjewadi, these are all planned or rather uh, scheduled to be made very infrastructurally advanced. Having said that, you will typically observe captive campuses with sizable occupiers operating space out of it. There will be selective campuses which will actually have the largest chunks. So there'll be a lot of concentration in fewer office parks as compared to the other two markets, which also allows scope for a higher capital appreciation. Of course, these are markets where tenants would go as bargain hunters, or rather, these would be back office locations, which is basically referred to as a sub-dollar market, which allows appreciation to have a wider scope. So that's the characteristics of a peripheral business district. So now that we've covered this, uh, moving on to Mumbai as a market. Now, Mumbai, of course.
Sorry, just before we get into Mumbai, maybe I'll just give you a brief break because we've just covered quite a lot of content. So maybe I'll just help everyone summarize what we've discussed. So from what I understand, the India CRE market is doing really well, right? Effectively, a lot of office space is being built and a lot of office space is being absorbed as well. It's not just that people are building and it's lying vacant, it's that it is being occupied as soon as it is done completion, right? So all the concerns that a lot of people, some people still might have related to work from home may or may not be true. It is true that it has some effect, but India is still a growing market. We are not like the United States, which is a mature CRE market where there is excess capacity. India is still a place where the capacity is being built. So the office space market is hale and healthy, so as to speak. And then there is a lot of demand from the investors. The charts that you show clearly show that a lot of institutional investors are interested in the office space first before anything else, and the demand seems to be increasing, right? And even the ticket size seems to be increasing. So as a company, I guess even Strata is on the right track with the slew of office space office opportunities that we are coming up with. And I found it very interesting the way you looked at the SBD, CBD, and the PBD structures in the country, right? I guess India, we are a country where our cities have only started really growing over the last 10, 15 years. So I think maybe for the benefit of our customers, many of whom are in Bangalore, I guess CBD is MG Road and nearby areas, whereas the secondary business district is Koramangalam, HSR, Indranagar, and when you say that, and when I recollect what you were saying about who occupies these spaces, it makes a ton of sense, right? Central Business District, Bangalore, it's small offices, it's front-facing offices, stratas in CBD. A lot of real estate companies are in CBD. A lot of financial institutions are in CBD. SBD, you tend to see a lot of startups. Koramangala, Indranagar, slower startups, so mid-scale offices, uh, financial institutions, as you mentioned. I think even in Bangalore, a lot of the banks have a larger office space in the PBD and in SBD. And in PBD in Bangalore is Electronic City, Whitefield. And as you said, uh, just massive office spaces, huge office parks, not much else, and that giving the scope for infrastructure to actually come in. So that's very interesting. I hope people have been able to follow with us so far. If you do have questions, put them in the Q&A right away. We will cover it at the end. But because we have a lot of ground to cover, and if you have questions, put it in the Q&A. We will take it up at the end. So now I think we're good there. Maybe Ekta, we can continue. Thank you.
Thanks for that, Naren. Right. So, now that we've covered this, touching upon the Mumbai market, as I mentioned earlier, the Mumbai market is one of the most mature markets of the country, of course. Now, it's seen the highest leasing and investment volumes, as we discovered earlier. Another interesting fact is that it is one of the most densely populated commercial office markets. We have about 136 million square feet of stock in just 4,300 square meters. To give you a comparison, picking from what Naren was referring to, we have Bangalore, which is somewhere around a 200 million square feet of stock in 8,000 square meters. So Mumbai is literally half in terms of the area. So it's very densely populated as a commercial market. It's largely driven by redevelopment opportunities, as I touched upon earlier, that there is a scarcity of land and scope for further new development. So it's largely driven by redevelopments, as you must have seen. It's the financial capital HQ of majority of banks. So that's a little bit about the current trends in Mumbai. To touch upon the markets in Mumbai, we have old CBD, which I was referring to earlier, which is your Nariman Point, your Cuff Parade, etc. Everything that's in the South Bombay, which now you might be able to relate is largely older buildings, fewer offices, less institutionalized, because there is currently a limited scope for further social infrastructure development, which is followed by Central Mumbai 1 and 2. These are primarily your Lower Parel and Worli as office markets. They erstwhile Worli touched rentals as high as 800 rupees per square foot, currently trades somewhere around 300. So they did see a very significant upside, but as you see, there's already roads with flyovers already developed, which again allows limited scope for social infrastructure development. And then we have BKC, which has really come up in the last few years, right, which now commands the title of new CBD as we speak. Most of the front offices for all the big companies that you can think of, all the grade A companies, Google, Apple, Amazon, Facebook, Strata, we're all based out of BKC. So these typically in Bombay, it's slightly different, that it is these four locations that collectively form the front office markets, then followed by your western suburbs, 1, 2, and eastern suburbs. So these primarily are your SBD. An interesting thing to note is that western suburbs and eastern suburbs together form, which is your SBD, currently forms about, say, 40% of the 35 to 40% of the total stock of office, with at least 7 million square feet more of institutional supply, which is going to be pumped into these markets, which we'll touch upon later as we go. So this is a little bit about the office market as we speak. You can also look at, so the data captured here basically is your stock and the absorption in these markets. So you see that CBD actually has had the least absorption, primarily because lack of supply. So existing occupiers do not vacate the units easily, which is what I was referring to, and hence your stable rentals, right? And obviously also because there is no new developments which are there to fill up. So that's your CBD. And this also applies to our new CBD now, where BKC actually has very, very limited vacancy, and it's also led to it's also led the rentals to go up severely high. So one of the buildings, which is actually one of the most expensive buildings in the city, is actually trading at 525 rupees per square feet per month as a rental. So that's the kind of trend that's been observed. Of course, western suburbs in the recent years has also seen a very sharp growth in terms of rentals, primarily because of interest in in it as a back office location by large occupiers in the likes of Citi, Deutsche, Morgan Stanley, JP Morgan, you name it, and all these companies have their back offices in this market. So that's a little bit about the structure of Mumbai. Interesting infrastructure updates. I think the most talked about remains the international airport, which is likely to be operational in 25 as anticipated. However, keeping aside the delays, there's also the Trans Harbour link, which is nearly completed as we are given to understand, and this is definitely going to or likely to change the scenario in Mumbai from a Navi Mumbai standpoint. It is the largest uh, sea connectivity in India, about 22 kilometers long, which will be covered in 15 to 20 minutes. So in 15 to 20 minutes, you're actually reaching from Ulve all the way to Parel East. So that's a little bit about Sivri basically. So that's another interesting update from an infrastructure standpoint. Coastal Road is the phase one of Coastal Road is nearly complete as we speak, which connects from Nariman Point to Bandra. So that's another interesting. So as you see, there is a lot of infrastructure development which is planned around the city. Sorry, one second. Right. As you see, there's a lot of infrastructure that's planned around the city in terms of road. We also have the metro line that's planned. Now, another interesting thing that I would want to point out here is that this is your SBD markets, which is 1, 2, and 3. This basically has at least 6 lines which are passing through it. So there is a lot of emphasis, going back to my point earlier, there is a lot of emphasis on the infrastructure connectivity towards SBD. Now, another interesting thing is that this right here is your line 6. As we speak, there is close to 7 million square feet of institutional office space, which is going to come into this market. Of course, they would come with a certain pedigree of assets, which is very likely to take the rentals upwards. To name a few, we have Maple Tree, which is coming up with 2 million square feet in Vikhroli. We have Capita Land, which has partnered with L&T, coming up with about 2 million square feet here. We have Raheja that's coming up with space. We have RMZ, CPPIB basically invested in the RMZ's first commercial project in Mumbai, which is also going to be coming up on this road. So this is again something which looks like the most buzzing market now as we speak. The blue line that you see here is the line 1. Now, just some numbers around this. Most of the commercial office buildings here saw a very significant increase in the rentals once the metro line was operational, simply because it improved the connectivity of this particular location, which is actually one of the most dense commercial office markets in the country. So, having said that, the rentals actually went more than 10% in a span of a single year when the metro was operational. So, keeping in mind all these factors, there is a good amount of opportunity that we foresee in the SBD vicinity. Of course, every market has its own pros and cons. Like BKC, it would be good to invest in projects which have upgradation potential, or under-rented projects which have a mark-to-market potential. So that's actually one thing which would apply to any CBD opportunity. When I say mark-to-market, I'm talking about say the market rentals being at 170, and the current occupier is sitting at say 150. So there is a mark to market or rent correction opportunity. So you will obviously be entering at a 150 rupee rental with a reduced capital value, and once the asset or the occupier renews the lease, you're obviously enjoying higher rentals, and with exit you will also be able to benefit with a higher capital value. So that's one thing. Again, Thane is another interesting market, which was kind of slow for the longest time, at least in my personal view, that I have seen in the uh, uh, from 2017 to 2019, 20 almost, the rents were more or less growing at 2 to 3%. But in the last few years, it has also seen interest from a lot of occupiers, more from a leasing standpoint, and the rentals have really seen a very sharp increase in this market as well. Now, with this, we kind of cover the entire Bombay uh, market as such. Now, while I've already covered, I'll just reiterate why one would invest in Bombay. Largely, the rentals are are a function of supply and demand, which really is at its peak in Bombay, primarily because of dearth of land, right? Low vacancy rates in these markets are likely to take the rentals upwards in the near future as well. Again, having said that, there is a great interest that has come from institutional investors. There is a lot of emphasis around the countrywide connectivity with Mumbai. You have the bullet train that's coming up, connecting BKC to Ahmedabad. So, with all of these factors in the long term, while Bombay is a market which has seen its high days, it's very likely that this trajectory is likely to continue in the coming years as well. So, so this is a little bit about Bombay. Moving on to Pune. Now, Pune, of course, owing to its proximity from Mumbai, as well as in isolation, it is a very strong industrial and logistics market with, prime markets like Chakan, Talegaon, which have your largest of large occupiers operating out of there. It is only likely that their front offices are going to scale up in Pune. Now, apart from that, there is also a lot of traction from institutional investors in Pune as well. Uh, Basically, Mapletree again, Brookfield, Blackstone, all your top guys are in Pune as we speak. Following the same characteristics, we have CBD, which is your Koregaon Park, followed by SBD West, which is your Baner, Aund, Balewadi. SBD East is your Viman Nagar, Mundwa, these locations. SBD Kharadi is again a very prominent office micro market, which has a lot of interest from sizable funds. You have Mapltree, which has invested there. You have Prestige, which is coming up with a very strong portfolio, while not a fund, but a prominent developer in the vicinity. And you also have Godrej, which has invested in Mundwa, which is the SBD East per se. So that's a little bit about the Pune office market as such. Speaking of trends, the Pune market currently stands at 84 million square feet. To touch upon the area, it is 7,200 square meters. So you can still see how Bombay is very compressed in terms of or rather densely populated as a market. Now, coming back to Pune, most of your occupiers here fall in the ITES sector, BFSI back offices, automobiles, and manufacturing industries. In the last 3 years, the office supply has seen almost a 10% increase. There is a very great interest, which I've already covered from several players. In terms of rentals, CBD right now ranges. So these are, of course, averages that we've captured. So CBD would range somewhere between a 70 to say 120 rupee rental. SBD East would range anywhere between a 60 to 90 rupee rental, so on and so forth. So we've basically concised these two averages. So as you can see, they are still 70, 75 rupees rental, which basically allows some occupiers to enjoy lower rentals and also benefit from the social infrastructure that Pune has developed now in the recent years. So a little bit about the infrastructure in Pune. We talk about some of the key roads which are coming up. The most important seems to be the ring road, which is proposed. While still in discussion, this does seem to be following the trajectory that Bangalore did. Apart from this, of course, the international airport remains to be the airport which is within the city. And therefore, we can definitely anticipate these locations to have a lot of traction. There is a lot of upcoming supply in these locations, primarily from its proximity to the airport. So yeah, this is a little bit about the Pune market, touching upon the metro line. So this is your central point. The way Pune metro line is designed is that multiple lines kind of go on to merge in the center, which is your Shivaji Nagar as a location. This blue metro line, which is currently functional up till here, is awaiting further extension. The last phase of this, which is from Vanas till Ramwadi, is likely to be operational in the next couple of months. So this is your Viman Nagar vicinity, and this is your Ramwadi metro station, where currently the Aqua line ends, but there is a proposed discussion which is going on, which is likely to take this up further east. So why invest in Pune? Second, in terms of the ease of living, it's an affordable market, one of the largest IT hubs, almost 10 to 11% share of digital talent in India. So these are some of the stats which basically make it very, very attractive from an occupier standpoint. Another interesting fact about Pune is that it is a flex office leader in the country as we speak. So companies like Ericsson, Google, Concentrix, Zomato, the largest grade A occupiers actually operate out of flex offices, rather managed office operators. When I say managed office operators, there are three segments of flex offices. One is, of course, your uh, co-working setup where individual or few smaller setups are basically occupying space. And then you have managed office operators, which are enterprise operators. So these are service providers, which basically provide seats upwards of at least 100 to 200 seats, going all the way up till 500,000, etc. Right. So again, another important thing is that so many companies in Pune actually don't have their conventional office, and they are fully operating out of co-working spaces. And when I say some companies, these are all grade A occupiers. Now, why I'm picking on that is, if you see right now, CBD and SBD West is actually dominating the share of co-working occupier, or rather flex operating operators. However, the share of flex space in SBD East, which is your Viman Nagar and Kharadi, is still low, which definitely is reflecting in the demand that is there for these flex operators. So as we speak, we see tremendous demand in this vicinity for flex operators who in exchange have demands from end tenant wanting to occupy space here. So this is another untapped a market that can be explored. And of course, this having a flex operator comes with its risks. But there are players who come with very strong financial books of accounts, and a very strong presence and past record, which basically restores the confidence in their pedigree. So that's on the flex operators. We end with some of the prominent tenants in each of these markets, which is basically for reference. So you have CBD, which has BMC, Deutsche, WeWork, Walter Kluwer. SBD is largely your WNS, SaaS, mostly driven by IT companies. SBD West, again, Siemens, Mindtickle, etc. And lastly, this is an important thing that we wanted to kind of touch upon. In our evaluation of assets, while capitalization rate is given a lot of importance, we also want to highlight the other parameters which actually come into play. Of course, commercial terms, tenant pedigree, location, asset quality. These are some of the obvious ones, but it's also some of the not so obvious ones, which, like I mentioned, the mark to market opportunity, the infrastructure trends, and the upside that is expected out of that. The example that I gave of line one, the developer profile is another important thing. Demand supply, which we covered, upgradation potential. This is a very important parameter. I'll pick it up with some examples. So, a very prominent institutional investor had actually applied this strategy to several of its assets, where they went on to acquire a underperforming asset in a very prominent location. They invested in the upgradation of this asset, and the rentals actually saw a 20 to 25% upside. So this is again a strategy which is something that we try to apply as and when. And of course, FSI norms keep changing from time to time, especially with the metro coming in and the development on infrastructure, roads, etc. The FSI potential is another hidden component which we evaluate when we are assessing an asset. So with this, we come to the end of the session. Naren, we can open up for Q&A.
Yeah, thank you so much, Ekta. I think we covered quite extensively some of the things such as how, especially the last part, right, where how we evaluate an asset. I mean, you can even keep that slide open because I think there is so much there that people can learn from to just try and understand some of the things that go behind how we look at a property, right? Folks, the Q&A section is open, so please do put in your questions. But I just have a couple of questions of my own, and then we will jump straight into that. Now you covered the point around FSI, right, Ekta, which is effectively determines how tall a building can be, if my understanding is correct. So maybe you can just, for the benefit of our for our listeners, uh, how does that help someone, right? Like say we purchase an existing asset and it has unused FSI. Uh, what is the potential? What can we do with that?
That. So FSI actually is a breakup of multiple components of the FSI. So the first one, of course, is the permissible FSI, which is available for any land parcel, which typically ranges between 1 to 2 as we speak. Over and above, there is a transfer FSI, TDS basically, which basically can be taken from adjacent land parcels. So, for example, if you have a land parcel which has a commercial building and you're acquiring another land parcel in the adjacent building, so the unutilized FSI of this building can actually be loaded on to the other building, and you can construct a higher building. Now, this is of course subject to your airplane funnels, etc. So this is one way, and another way of purchasing this FSI is directly from the authorities. So you can directly purchase these FSIs from the authorities, and the availability or the quantum of that is defined on various parameters. One being the width of the road that is next to it. So the wider the road, the greater FSI benefit you can get. Another thing to note is uh, when we're talking about FSI, this is basically when you're paying for this FSI, of course, it comes at a cost. So the cost typically is 30% of the ready reckoner value at which this FSI is purchased. And of course, then it again comes into the demand and supply forces and how the market kind of perceives it. So that's how the FSI works, Naren.
Very interesting. Okay, I think we can go into the Q&A. Um, Ekta, maybe you can open it up as well so that you can have a look at it.
Yeah.
Yeah, actually. So we can just go through that, or maybe you close it and I'll read it out for you. I think that'll make things easier. People will be able to see the screen as well. So Bijoy Balram has a question. The Pune market, as per your study, especially the PCMC side, including Hinjewadi, is it bound to appreciate soon? Since the work from home stuff is gaining pace fast in a lot of companies, I'm already invested in, I think, Pune opportunity too. What is the approximate expected asset appreciation in the Hinjewadi for the next 5 years?
Sure, I'll answer that, Naren. So now Hinjewadi and PCMC as locations are actually under a lot of interest in terms of industrial development as well as captive development. Actually, they are in isolation different markets. So I'll pick up Hinjewadi first. Now, Hinjewadi as a market is uh, likely to get almost 30,000 residential construction of flats, which is also in turn likely to increase the commercial office market there, which is already at its onset as we see. The land parcels that are available now, you might see on the map that there are a lot of land parcels available, but land is a different story altogether when NA or basically the land has to be clear for use. So that kind of land parcels are very, very limited, which is available. And again, as I pointed out, it is purely a function of demand and supply. We see that now as we speak, there is already so much interest from prominent developers to construct residential projects there as well as commercial. In fact, you have Blackstone, if I'm not wrong, which Panchsheel is very strongly present in that market with multiple projects which are already commercial and doing well. So commercial market is likely to pick up more from an overall ecosystem perspective. As for PCMC, the similar story I would say in both of these locations. In fact, you will see that even the industrial and warehousing rentals are ranging between 40 to 45 rupees, which is very, very high for an industrial player to consider. However, they are willing to pay these kind of rentals because Pune as a market is where employees are unwilling to travel longer distances, at least from what we have witnessed, and which basically makes each market thrive in its own way, and therefore the scarcity is actually reflecting in the rentals already.
Got it. I think, I think that actually covers it quite well. So effectively, Mr. Bijoy can expect our Pune investments to appreciate in value, if I understand the summary of that, right? Mr. Lakshmi Narsiman has a question. Any Bangalore residential projects that Strata planning to work on? I think no, right? As a company, we've always been clear that residential is not something that we want to get into. It's just not our cup of tea, nor do we think there is value in it. Does that sum up the statement, Ekta?
Yes, I think that's correct.
Yeah. Also, there was another question. Do we have any plans for the Bangalore warehousing market? I mean, we always do, just that there is nothing definite that we can commit to now, but rest assured, we will come up with new opportunities there. Okay, Mr. Bijoy has a follow-up question. Uh, how do you prepare the asset valuation reports, which you upload in 6 months to a year's duration? It's being the only document from which we investors know about our property value.
Sure. So, of course, we outsource this to one of the best property consulting firms across the country. Currently, it is JLL that helps us with that. So, the way they go about with evaluation is there are two approaches which are followed. One being your basically the cash inflow cycle basis of which these valuations are derived by discounting these cash flows. And the second approach, as we know, is the most common one where we compare the market trends, what are the other transactions that are going on in the market. And in line with that, we adjust the qualities of our asset in terms of the size of the take up, in terms of the size of the asset, age of the building, depending from asset to asset, and then the price is derived. We cannot hear you, Naren.
Oh, sorry. I was saying that is helpful. And I think the key point there is that Strata doesn't prepare the valuation report. We always give it to an independent third party so that the numbers there, we don't decide them. It's a third party. And it's very important that we do this because tomorrow, if we want to sell the property, no one's going to listen to us about what we think the property is worth. They're going to listen to what JLL or CBRE or somebody, a large IPC, decides what the valuation of the property is. So I hope that answers your question, Bijoy. Sandeep has a question. How does the mark to market opportunity help a strata investor, as my lock-in period is equal to lease period, and this is as high as 5 years sometimes? Ekta, before you get into that, Sandeep, maybe I am confused, but just to clarify, the lock-in as a strata investor is only 1 year. You're free to sell your shares in any of our investments after a year. The lock-in that we usually talk about is the lock-in for the tenant, and that can vary differently. If you're still with us, maybe you can verify if that is what you meant. But otherwise, Ekta, you can take up the point on how does the mark-to-market opportunity help a strata investor?
I take it up. I think I understood, and my inference of the question is basically that the if the lock-in period is longer, market opportunity may not,
Ah,
if the tenant is continuing in that rental. So to answer that question, of course, when you're entering this asset, you are already at a certain yield, right? Which is basically in line with your expectation. So that mark to market is anyway an upside, which will basically activate when the lock-in expires or when the tenant vacates or where there is a renegotiation opportunity. But at a certain point, it is going to activate. And even if you were to exit as is, you can always have the argument that your asset is under rented, which means you will be able to fetch a higher capital price for it.
all right. Okay. My apologies, Sandeep, if that is what you meant. That makes sense, right? Even if the current rental is low, when we sell it, we can always counter with the proposed buyer that, hey, you have the potential to lease it out at a higher price, so I deserve a higher rate for the asset. Right. That makes more sense. Awesome. I don't think we have any more questions here. We'll just wait for another 10, 20 seconds in case somebody else is typing. But if there is none, I wanted to once again thank everyone who took the time out to attend this session. I hope it was helpful for you. This is among the many sessions. Oh, Sandeep does have a question. How do you decide cap rate?
Uh, right. So while I touched upon this maybe briefly, but I'll again kind of emphasize. So of course it is a factor of demand and supply, because and the market. So where if depending on where the asset is located. Now, if my asset has a higher upside potential, for example, it has a higher mark to market potential, or it is lying in the growth corridor where my capital appreciation is going to be really high, or if there is an infrastructure um, uh, development that is likely to come in the next few years, all these parameters are going to yeah, all these parameters are basically going to impact my rentals, right? And therefore, they are going to impact my capital appreciation. My the end result or end goal for us is the IRR. So the idea is to balance it out. If we know that there is a very high capital appreciation potential, we accordingly define that okay, perhaps this could be the cap rate, and of course, this would be in line with other basic study, which is what's going on in the market, what are the capital values in the building, what are the recent transactions that have happened, etc. So that's one. And how the capital rate is impacted by interest rates. So capital rate is, of course, impacted by interest rates because when we define interest rates, it is a combination of the repo rate and then thereafter the spreads which come into play. So another point which is something which we can note is that the confidence in the economy is definitely going up because the last increase in the repo rate was 25 bips in Feb 23. And since then, we are almost at the end of the year, and there has been no further revision in the cap rate. So, of course, if the cap rate goes up, the expectations go up. But then there are also some various arguments if I compare it with real estate, because real estate as an asset has qualities of both equity and debt. So, the moment the capital rate or the interest rates rise, the demand for real estate also goes up, which means that there is a lack of supply, which again in turn impacts the yields. So it's like a cyclical uh, thing, really. Right. So, okay. So we have Okay, that's all. You're on mute, Naren.
I don't know why that keeps happening. Sorry. So we do have a question from Raghuram. I'm invested in the office space in Hyderabad. So he's invested in the financial district opportunity. How is that market shaping up?
So I actually have a point to this. So in all the reports, so by the way, all this assessment, all the reports, all the details that was shared was after assessing some 15 plus reports from different IPCs, JLL, CBRE, Colliers. And we actually saw in some of the reports that Mumbai, Hyderabad, and NCR were among the highest in terms of investment interest in terms of the office space. So the market
Yes.
is really growing, and obviously you have the best infrastructure in Hyderabad. So likely to pick up pace, continue the momentum that it is at.
Yeah, I think very recently the new chief minister of the state, Telangana, I heard him say that I am among the very few politicians who come from a real estate background. I know how to develop real estate. So I think folks in Hyderabad are in for a good time as far as that is concerned. Okay, so if people do have more questions, please type them in. I just wanted to mention that this is a Strata Circle session. It's one of the things that we do on the Strata Circle program. If you are a Strata client, you have access to this exclusive community where we discuss quite a lot of topics. Actually, we talk a lot about investment ideas which go beyond real estate. We do talk about some of the most interesting things that are happening in the real estate market. It's also a space where you're free to interact amongst all your investors. We even have spaces for each of our assets where you can speak to your fellow investors. So if you haven't signed up on the Circle platform, please do. It's only open for Strata investors though. So if you haven't invested with us yet, do that soon and then you'll get access to the platform. Once again, Ekta, thank you so much for taking the time. And folks, I hope this was helpful. Thank you.
Thank you.